Yo, 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 what's going on, people? How you doing? Kunal here, Bulls on Wall Street. Hope you guys are having an amazing Saturday. I got some really good feedback on the last video I did on the chart of Bitcoin, and quite a few people had asked me to take a look at Ethereum. Ethereum is the second most traded coin after Bitcoin. It's actually my favorite to trade out of all the main coins. It's got the kind of the best characteristics to trade in terms of volume and range. And so this is the one that I primarily trade versus Bitcoin. But quite a few people asked me to take a look at this chart and kind of give them an idea of when the bounce started. Just a quick FYI, next week, this coming week, I'm going to be doing a live stream with one of my mentors, Rahul, who also is in the cryptocurrency market. He's got a company called Unicorn that is involved in esports, and they have their own currency, Unicorn Gold, that will be launching soon. And he's an expert in some of this stuff that we're doing with trading the currencies and investing in them also. And so he's got some great insight into where the future of this market's going to be. And so I think you guys are going to really like it. Tune in. It's going to be on July 19th, Wednesday, 5 p.m. I look forward to seeing you guys. We'll be going over some charts, talking about the market itself, and really kind of digging into where we see the future of all this. So let's take a look and talk about Ethereum. Okay, so the ticker of Ethereum is ETH. This is Coinigy. This is a charting platform that I use. There's a few out there like TradingView that are all pretty much similar. They all kind of use the same API, I believe, of TradingView. So they all have a similar look. But what you can see with this ETH here is that, you know, this thing was, look, in February, man, look at this. It got down to, in the beginning of the year, about $12, right? $5. So it's gone on just like the most epic run of all time, right? And not of all time, but right, it's gone on an epic run. When you go and you're in the dollars and you run to $400, there's going to be a period of consolidation and pullback. You know, that's just a natural thing. And so we've been in a short-term downtrend in Ethereum. We've been in a short-term downtrend in Ethereum. What you can see here is, right, you're making lower highs. All these bounces are getting faded off. And so when you see something like this, you know, when does the bounce start of this? Well, you don't necessarily know. One of the things with trading is you can't just assign a level and say this is where I think the bounce starts and buy into it, okay? That's a no-no, because when you do that, you're in no man's land, right? You're doing essentially a pull and pray, where you're taking a guess that this is a level and you just buy it, but you don't have any confirmation that that level is something that's going to hold. And so what I like to do here is always respect the trend, right? To the upside and to the downside. And so as this thing is coming down, you know, I like to start making, you know, some ideas of where maybe potential supports could be. So, you know, this was a big breakout here. That's at 100, right? You start to see some support building around here, even in the 180s, right? So, you know, this level could potentially be a level that holds. We don't have any evidence yet that it's going to, but potentially it could be. But how we know when the bounce starts? Remember that bottoms are a process. They're very rarely an event, meaning you don't just one day just start ripping and then the uptrend is back on. There's a process that comes into forming bottoms. And so what you want to see is that hypothetically, say it's this 180 that does hold, right? You know, you want to start to see some rounding action, some bottoming formation where the support is holding. An area where we can add some validity to it, right? So let that support build, and now we can start monitoring it a little bit closer. Then, for me, what I'll be doing is if it starts to build I'll be very closely watching my 9 EMA. The 9 EMA represents your short-term moving average. And so when you have your 9 EMA still curling down on top of the stock or the currency, it's pushing it down, and it's just you're just kind of riding with the trend. When you start to see the trend start to reverse, one of the first signs you'll see is your 9 EMA will start to flatten out. It'll start to actually flatten out, and that will tell you that your short-term trend is starting to even out, okay? Your short-term trend is starting to even out, and so that'll be a clue. And then when you break over the 9 and you can hold, that's when, you know, I'm looking at it saying, okay, all things are a go. And so when we think of trends, there's a few different ways to identify trend. Number one, you have your moving averages, and then we use higher highs and higher lows. So what that means is once we break over the 9 and make a new high, we always watch the first dip, right? What's that first dip? Does that first dip hold? And if it holds and makes it a higher low, well, guess what? Now we have a higher high, a higher low, and now we have some levels to actually trade around and respect. And now we can put on a trade with some levels to manage our risk. Because that's the whole game, guys, right? Is how do we manage our risk? Because we don't want to just get in front of the train, right, and get squashed. We need to put our money behind something that's going to be low risk that we know can work, right? Because I don't want to just piss away money to piss away money. Now, as this is happening, let me tell you a little bit about aligning on multiple time frames, right? So what I'll start to do as this is, once I start to see some bottoming, is I'll start to look on smaller term time frames, like an hourly chart, and I'll start to look for the same type of deal. I'll start to look for a bottoming process, and then we'll have to start clearing some levels, and then, right, that will give us a clue of what's happening on the daily chart, okay? And so that's really, really important when you're doing this. Now, look, while we're waiting for that bottom to happen, the good thing about all these crypto brokers is that you can short this thing. You know, right now it's acting like a little piggy, and so guess what? You know, these type of patterns, you know, when you're seeing like these type of bear flags and these patterns, you can short these. You know, so you can play these rips and really catch some nice moves. You can see like something like this. This from here at 200 down into these flushes, I mean, that's $10, $15, right? You short 20, 30 shares, which doesn't take too much investment, right? You can rip really nice gains. You know, that's how I've been building my account. I've been just, you know, 20, 30, 40 shares, rip 20 bucks this way, rip 20 bucks that way, 10 bucks, 20 bucks, scale out. And that's how I've been kind of building up my account as I get like the feel of, you know, how this thing moves. See, every instrument, every stock, they all have their own character, right? You know, stocks are kind of like people. They all act in a different manner. When you put two next to each other, they can act in completely different ways, even when they have similar looks. And so, you know, as I've been getting used to trading around this, I've got a good gauge of how this thing moves. And yeah, you can be shorting this thing. So it doesn't necessarily mean like while this trend is just in a downtrend, you know, don't worry about that, because, you know, you can play an instrument to the up and down. So it's not just like, oh, okay, you know, I've got this awesome trender and, you know, I want to participate. You know, we can participate both ways. So when they're going up, we like to long them and play with the trend. And now that the trend is down on a short-term basis, right, we're shorting into the pops and things like that. And you can use your moving averages on your daily to also do some swing trade shorts. So, you know, as this thing has been popping into the 9, you can be taking positions and kind of riding it down till you start to see that bottoming process. So hopefully that helps, guys. Let me know if you have any questions on this stuff. You know, leave it in the comments. I'm going to, in the next few days, talk a little bit about some of the different brokers. I'll do a review of some of the different charting platforms. There's CryptoWatch, TradingView, and Coinigy, and they all have similar things. And then, you know, even the brokers themselves or exchanges, they have their own charting too. So like if you're using Kraken or Bitfinex, they all have basically TradingView charts in them. So, you can use charts even to that. So you don't necessarily have to, pay money to have like Coinigy or something. And by the way, Coinigy is actually fairly cheap. It's like $15 a month or something like that. I don't know the exact price. Let me take a look here. I don't think it's really that expensive though. Dun, 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 dun. Manage subscription. Let's see here. Accept Bitcoin. Well, doesn't say, but I think it's like $20 or something along that end. So it's not that expensive, but every dollar counts, right? So we always want to be aware of that. You can use TradingView, and they have, I just have their free one, so I just, I'm just using their free one, but it's pretty cool. Like if you open up here to interactive, similar look. The one thing I do like about TradingView versus Coinigy is that they have VWAP, which when I'm day trading stocks, I use VWAP all the time, like spikes into VWAP or pullbacks to the VWAP. You can see that it reacts really well to the VWAP. So, I do kind of peruse through this sometimes, but I just find Coinigy, I like the overall look of it. So hopefully that helps, guys. Let me know if you have any questions, and I will make sure to get to them tonight when I get back. Take care.